So one of the biggest things that can eat up your investment gains is taxes. So of course, whenever there is a way for us to pay less taxes, we are all ears. One way to pay less taxes on your investment gains is to contribute to a Roth IRA. A Roth IRA is used as an investment vehicle so that you can invest in different things like stocks, bonds, mutual funds, ETFs, and due to the tax benefit, you can save a fortune on your investments. In this beginner's guide to Roth IRAs, you're going to learn exactly what a Roth IRA is, the benefits of having a Roth IRA, the rules, and where you can open up a Roth IRA. Thanks so much for stopping by my channel. My name is Sabrina Renique, and on this channel, we live a life that we love while planning for the life that we want, all through personal finance, travel, and lifestyle. So if you like videos like this, please like this video, subscribe, and hit that notification bell button. Let's get into it. A Roth IRA stands for Individual Retirement Account. So in this account, investments can grow tax-free. And when you decide to take your investment earnings out during retirement, you will also not pay taxes on any of that money. Now, this is such a big deal because this tax advantage allows people to save hundreds of thousands of dollars on their investment. Let's talk about exactly how a Roth IRA works. So in order to open up a Roth IRA, pretty much anyone can do it, and you would do it similar to how one opens a checking account. Once you open this account, you're going to be able to put money into your Roth IRA. Now, this is just money that you have already been taxed on, so money from your paycheck or any income. Once you have put money into your Roth IRA account, you are now able to choose your investments. You can choose to invest in individual stock, mutual funds, bonds, ETFs. It all depends on what your investment plan is. So once you actually invest your money, now your investments can start to grow tax-free. So one very important thing to note is that the maximum contribution for a Roth IRA is $6,000 a year. So you cannot contribute more than $6,000 to your Roth IRA. It's also important to note that your Roth IRA is an account that holds your investments. It is not the actual investment themselves. Your money can still fluctuate in value based off of the investments that you choose. So the real benefit of this account is that you will not pay any taxes on your investment gains as long as you follow the withdrawal rules. So let's talk about some of the benefits of opening up a Roth IRA. Most people tend to open up a Roth IRA when they're younger because typically when you're younger, you make less money and you're in a lower tax bracket. As I mentioned before, with a Roth IRA, you are using post-tax money, so money that's coming from your paycheck or your income, and that has already been taxed. The older people get, people tend to make more money and are therefore in a higher tax bracket, meaning that their income is going to be taxed at a higher percentage. So basically, you would rather pay taxes when your tax bracket is lower, meaning that your income will have less taxes taken out of it, than when you're a bit older and your tax bracket is higher, and then your income is going to have more taxes taken out of it. So with the Roth IRA, you can pay taxes on your money now when your tax bracket is a bit lower, and then in the future, you won't pay taxes at all when your taxes are higher. You also want to open a Roth IRA as soon as you can and start investing because you have compound interest on your side the earlier you invest. Basically, with compound interest, you invest your money and it grows like crazy. So $1,000 invested for 30 years at a 7% interest rate will leave you with $7,612.26. If you wait just 10 years to invest that money will only grow to $3,869.68. So in between those two figures, nothing at all has changed. The amount invested hasn't changed. The return on your investment hasn't changed. The only thing that has changed is the amount of time your money has to grow. So that is the magic of compound interest, giving your money a very, very long time to grow in its investment. So another great benefit of the Roth IRA is that you can withdraw your initial contribution at any time. That's actually pretty cool. So if you ever need money from your Roth IRA, you can take it out as long as it's your contribution that you made and not any investment gains. So for example, if you contributed $2,000 into your Roth IRA and on that investment you made $500. You can take out that $2,000 anytime. However, that $500, you will not be able to take that out of your Roth IRA without penalties unless you're in retirement. Another benefit of opening up a Roth IRA is that anyone at any age can open this account. So this is good for young teenagers or children who want to start investing and want to start growing their accounts. So as long as the individual has earned income, they'll be able to open up a Roth IRA, and they cannot contribute more than their earned income. Another benefit of opening up your Roth IRA is that you can contribute to it whenever you'd like. So you can contribute $500 a month, or you can contribute one lump sum. And one of the biggest benefits of opening up your Roth IRA is that you're basically getting double tax benefits. So you can invest into your 401k and get your tax benefits there, and then you can also invest in your Roth IRA and get tax benefits there as well. Now let's talk about some of the rules for the Roth IRA. So with the Roth IRA, like I mentioned before, you can withdraw your initial investment. So if you invest $2,000 and that investment grows to $500 and now your account is at $2,500, you can take out that $2,000 whenever you need to. However, that $500 cannot be withdrawn unless you are following the withdrawal rules. So for the most part, that means that you'll need to wait until you're 59 and a half to withdraw any investment gains. So there are also some rules around your income as well as your marital status. So for example, if you are single and if you're making less than $124,000 a year, you can invest $6,000 into your Roth IRA, which is the maximum that can be invested into your Roth IRA. However, if you're single and you're making $139,000 or more, then you are not able to contribute to a Roth IRA at all. So like I said, there are different rules based off of if you're married or single, filing jointly or filing separately, that determines how much you can contribute to your Roth IRA. So I highly suggest you doing your research on those specific rules before you do contribute to your Roth. So let's talk about how you can open up a Roth IRA. Most online brokers, banks, robo-advisors, they all offer the Roth IRA account. So this can include JP Morgan, Betterment, Vanguard, Fidelity. I personally use Fidelity for my Roth IRA, and I've been able to make automatic payments from my checkings account straight into my Roth IRA investment, and it's been great. Fidelity has a great customer interface, so I think it's great for beginners. All in all, Roth IRAs are amazing, and they're definitely necessary if you are looking to invest and save money on those investments by not paying taxes. So you know I'm all about taking action, even if it's baby steps. So my challenge for you all is to take a look at your specific situation and see how much you can contribute to a Roth IRA. For those of you who might be feeling a bit daring, my challenge for you is to open your account and make your first investment. So this investment can be $1, it can be $50, it can be $500, whatever works best for you. So put that on your to-do list, and I will see you all next week.